intimate conversations with wedding professionals as they share their stories, insights, and tips from inside the wedding industry. We'll chat about how to be authentic and that it's okay not to be perfect or run your business like someone else's Instagram. Let's dive into the privilege it is to serve our clients and discover the talented creatives that make up our community. When we share what we know and who we are, we better serve our couples as a wedding day team, as well as each other. Simply put, Be Fabbo. Now here's your host, Bobby Brinkman.
Hey, Fabbo Podcast listeners. I am so excited that you're here today. Today's topic, business, tax, and money. All the things that we love to talk about, right? Everything that we get up every day wanting to do. Not so much. As creative entrepreneurs, I know that these are the things that we dread the most, but man, they are so important for us to keep our doors open. So we have found a great guest to share her insights, her tips, a fabulous businesswoman. You're going to love hearing her story, how she came from the acting industry, how she found her way into helping entrepreneurs and all their financial needs. Erin Armstrong. Let me tell you a little bit about Erin Armstrong. She is an enrolled agent licensed by the IRS and serves as a business, tax, and money coach for entrepreneurs. She knows how confusing and intimidating business finances can be, especially for creative people like us. We're going to sit and talk a little bit about the wedding industry in particular, women in business, and just ways that we can save our money and put our money to use. We're going to take questions that, thank you all the listeners for sending in some DMs. So we're going to hit those questions. She's going to come back with her answers. We have a lot to get into on this episode. And again, information that she wants you to take back to your personal accountant, to your personal lawyer. We don't endorse anything here. We're not saying it's right or wrong. Every state and every county is different. I want you to keep that in mind when you're listening. Also, when you're listening today, maybe don't worry about having a piece of paper and pencil in hand. Sit back with your beverage. Take an hour or so today and just listen on some of these tips. Tina's going to link everything that we talk about today in the show notes, so you'll be able to get back to Erin to ask more questions, to take some of her classes, and just some things that Erin is talking about in general. I want to thank you guys for hanging with us. Make sure you stay till the end of the episode. Erin's got a special download just for our listeners. As always, I want to thank you for your support. I want to thank you for being here. I hope that you're getting something out of hearing everybody's stories. And today, this topic is one that everybody's asked me about, so I'm thrilled to be able to bring you somebody who's going to enlighten us and share the easier side of money, business, and taxes. Everybody, please welcome Erin Armstrong. So listeners, as I said in the pre-interview, I am super, super excited to be talking today about biz and tax money. I know that we don't like to talk about these, but as I said earlier, we have got an amazing Fabbo woman to help guide us through the fun side of what we need to be doing to keep our business legal and financially sound. So welcome, Erin Armstrong. Welcome to the show. Let's talk to our listeners. Here we go, Erin. Explain to everybody why money and numbers make your heart sing.
Thanks for having me, Bobby. I came to this from kind of an untraditional background, so I have a different perspective. So I'm just going to walk you through that and share why I think it actually can be really supportive and fun. So I grew up, like many people, in a not great money environment. Culturally, I grew up in the South. Money was never talked about really, so it's kind of like obviously we had to have it to live, but it just was never even addressed. So I really didn't think much about it growing up. I also grew up now that I'm older, was probably a financially abusive family. So I took on a lot of negative money messages, which isn't that uncommon for many people in the US. But I decided when I was younger to pursue the entertainment industry. And so from a pretty young age, I was working in Los Angeles in the entertainment industry. And how that's set up is you're really operating as, for lack of a better word, you're a freelancer or a small business owner, even though you might be hired to work for a production company here or there. And like many people, I wasn't thinking about money or taxes or accounting stuff. I just jumped in because I was following my passion, right? Something that I love to do. That's what lit me up. And that's really what I was thinking about at the time. But what slowly started creeping in over the years where I had questions as far as deductions or questions about the setup or the bookkeeping. And I started feeling really overwhelmed by it. I would look for answers, or sometimes I wouldn't look for answers.
Right.
But it came to a point where I really was like, there's got to be things that could help support me and make it clearer. So I went through about 3 accountants in 3 years.
Wow.
And and that's actually, I think many people have that experience where you think, well, I'm going to get the help. And then you end up even more muddled or confused than you were before. So I got a lot of answers that really didn't jive with how, like for example, I had expenses, probably much like many of your listeners, that weren't necessarily like traditional business expenses. And I didn't even think twice about it because, in my contract, it said I had to wear this or do this. And so I, of course, bought it and showed up, to fulfill my work. But then when it came tax time, I would notice that the tax filer wouldn't put it in, and then I'd be like, well, I had to do this. And like, oh no, that can't be a deduction or things like that. And I was like, this does not even remotely make sense. There's gotta be answers to this. Cause I even asked, at the time I was lucky enough to have friends that have been in the industry like 20 something years, and I thought they would have the answers. And I was really shocked to find that they didn't know more than I did about it. And so, kind of in true not humble, I mean, what's the opposite word? Kind of egotistical,
Right.
like I just thought, I'll find an answer for this. This can't be that tricky.
I'll solve that problem right now.
That's
and create
right.
a business to do it.
Well, I thought, I'm a smart woman. I can figure this out. So I started like diving in. And at the time, that was like over a decade ago, really everything was written for accountants or for tax filers. And so what started happening is I'm trying to find the answers. I'm like, start earning certifications, kind of an untraditional way, just because I'm like, I don't get this. Okay, so I better go read up about that, and I'll read up about this. And so I went in this very circular direction. But what started happening was that I started getting really clear answers, as I was reading IRS publications and court opinions and earning different certifications. And that immediately helped me in my, what I was doing then, still in the entertainment industry. And I had like, of course, as all working artists have, like many have a side job. So I had like another side hustle business. And I started applying the principles to my 2 businesses at the time. And right off the bat, it surely helped me save thousands of dollars every year. But what I started feeling, and it was much to my surprise, was so much more confidence and clarity, because having that clarity when it came to what I was supposed to do with the money, or what was a write-off, or what made it a write-off, or how do I set up my business, what about estimated taxes, all those things that I think we get so overwhelmed and cluttered with in our head, by addressing it and by having a clear plan, it really allowed me to show up so much more in my businesses at the time, because it gave me that confidence. It's like an energetic thing, for lack of a better way of describing it. There was a logistical piece for sure, but it just really changed the way I was able to show up in my work. And I've seen the same thing.
You're seeing a difference. You could immediately see all this research and work that you put into something that you didn't think you were going to be interested in is paying off now, so that what you want to be doing, that you love to do, as you said, your passion, like most entrepreneurs, now
Right.
You're saying, oh my gosh, I put some research into the things that I didn't really like, and now I'm going to get a reward for it.
Yeah, exactly. Yeah. So the reward was both financial, like literal, money, but also just having this freedom sort of in the ability to go out and pursue the things that I wanted, and know that I'm financially supported because I've done the right things. Right. So, within a few years of figuring that out for myself, I started, of course, helping other small business owners, and it just kind of became a natural transition. For 5 years, I ran a full service accounting firm in Los Angeles. And that was an interesting experience, because I did love it. And I started it because I had this passion for teaching and explaining and helping people feel good about their money, the business side of it. But I also ultimately found that was, if I was truly a full service accounting firm and as I scaled up, that I wasn't really able to do the instruction and work in the way I wanted to with people, because I ended up getting more pulled into, okay, this is the tax filing, this is the bookkeeping, this is, okay, I'm managing these people. And so I stepped back in 2017. I sold that part of my business. And really now I just focus on educating people and helping them support their business. So with all the financial pieces, so that they can really step in and lead at like the helm of their business. They don't have to do everything themselves when it comes to the financial side, but just having the awareness of how things work and how you can set up things to support you. Because even with all the helpers you can hire, you are the one that still have to make the decisions.
Right.
And, you know, that's why so many people sometimes get in tax trouble, even with great supporters.
Well, and that's the thing too. It's like, you know, entrepreneurs by that definition is somebody who says, hey, there's a need for this, I can fill it, or I don't want to do it the way ABC company did it. I want to do this. So when we talk about business and tax and money, it's the same thing. We're talking wedding industry right now. So we're going to be in the wedding industry, but we're still all entrepreneurs. And so when you decide you want to go do something, you have to do the research. The same thing goes here. The better you educate yourself and the more information you can find, then you can go to professional. At least I feel that I have enough. If I do my research myself, and I may not know to go right or to go left, but if I at least know that I have a choice, when I go to that professional and they start rambling, some of the things are going to be familiar sounding that I researched, and I might be able to say, okay, stop, never heard of that, or okay, I've heard of that, keep going. So, and then it boils down to a trust thing. You know, you touched on something earlier that people forget, that entrepreneurs are literally so many people that are self-employed. Entrepreneurs and self-employment can be two different things, but the majority, if you think about it, especially in today's workplace, the number of people that are actually, quote, self-employed or contract workers, like you said, all of Hollywood, most of the music industry, lawyers, everybody basically is sitting there waiting for somebody to hire them. Even though we see them on TV or in a movie, you don't know where your next role is coming. You don't know where your next album's coming. Just like us as wedding professionals, we don't know where our next client's coming from until they book us. So it's the better prepared we can be on this end and not just scramble in the month of April or in October, depending on when you do your filings and stuff. The better prepared we can be, then the better we can focus on our own clients and help our business grow. So I'm thrilled that you're here today. I'm thrilled that you're going to bring some clarity to us. And we're going to stick with the wedding industry questions. We're going to kind of stick with, you know, photographers have a lot of questions, but just in general. So I want to thank all our listeners. You guys sent in like over 40 questions just in DM and several on the comment section. So I want to thank the listeners for doing so. We're not going to get to all those questions today, but you're all going to be able in the show notes to click right to Erin and be able to find her. And I want to start this, you know, in Q&A part a little bit with, don't necessarily have a pen and paper in your hand, a pen and pencil in your hand. Maybe sit with your cup of coffee, your tea, your Coke, whatever you're doing. Tina's going to put everything we talk about in show notes. So maybe let Erin just filter into your head a little bit, let some of the words sink in there. And then when the episode airs, click on those show notes. Erin, you know, Tina will link back to everything Erin's talking about. And then like we said earlier, you want to hang around to the end because Erin's got something a little special for our listeners. But let's start off with some questions that we as entrepreneurs in the wedding industry face every day. And one of the biggest questions that I get asked always is, do I need a bookkeeper? Do I need an accountant? What is the process to start what I need to do if I'm just opening my business?
That's a great question. And it's going to depend a little bit on your personality and makeup. So the first thing I think is that you have to get honest with yourself. When we talk about money, really, I'm asking you to, part of why it's so hard to talk about money is because we have to be honest with ourselves when we're thinking about money, talking about what we want to do with it, how we feel. But for many people, they oddly enough, love the feeling of, doing the bookkeeping themselves. There's something that can be soothing for many type A people. There's also a lot of people that could not think of they would rather do anything in the world, but do something like bookkeeping.
Right.
So I think, as far as the bookkeeping goes, there's no right or wrong answer to if you do the bookkeeping or if you hire someone right off. But if you're a person that knows that you hate working with like numbers or doing a spreadsheet or working in a software or keeping track of every little thing, then that might be one of your first hires, to be honest. Because otherwise, are you going to get it done? So that's something to think about. I never want to say you've got to do it one way, because I think all of our personalities are different as far as just who we are, let alone how we interact with the money. But as far as the bookkeeping goes, that's something you could do yourself. But if you know that that's not going to feel good to you, or maybe you even like, or could see yourself liking doing the bookkeeping, for many people, they just don't have the time to do it, right? Because you've got the marketing, let alone the actual work you have to do in your business. So it could be just a time thing. So you can always hire a bookkeeper to, keep the actual records and all that for you.
And that's the question I want to say. I want to ask you is, what is the true definition of bookkeeping? Because we're now in 2019. I think bookkeeping in 1980 is a little bit different than bookkeeping in 2019. So bookkeeping versus accountant, they are two separate things, correct?
Well, that's a good question. I think maybe technically, but I think in this day and age, many people kind of interlink bookkeeping and accounting. Actually, if we're being honest though, all the accounting vocabulary gets very intermingled, and I'm not sure if that's just because culturally we don't address so much of it, or it's just our perceptions. So accounting and bookkeeping so the bookkeeping is the actual keeping of like your expenses and income, keeping track of it. And most people in 2019, whether you do it yourself or whether you hire a bookkeeper, are going to use an online software like QuickBooks Online or Xero or Wave or FreshBooks. So it is very different than 1980 in the sense that you have software that can help you, and it actually streamlines a lot of the work, whether it's you or whether it's a bookkeeper. Because before then, you really had a much more, there was much more of a paper trail, let alone all these special records you have to keep. There's
That's
something
the shoebox that we all have up in the work closet.
Yes.
Shoebox full of receipts that are all there that we go to the accountant in April and go, here you go. Right. And technically, I guess you could still have a shoebox of receipts, but more people are keeping track of it online. And that's because we have, with the explosion of the internet, it's so easy for, if you have like a bank checking account, of course, those transactions could just be pulled into the software. So I would definitely recommend that. A few people I work with, still like the pen and paper method or the Excel method. And so if you're doing that and that works for you, that's great. But if you find that that is not interesting or a little too much of your time, it's really easy and simple to be using a software to help you with that. As far as accounting goes, I think people think of that as a little more broader and bigger scale. So it's not just the day-to-day records, as far as keeping the income and expenses go, but it's looking at things more broadly, like you might have heard the term profit and loss report, or sometimes people call it income and expense report. So looking at what's left after your expenses, and looking at things like a balance sheet, which most business owners aren't super familiar with. They know that it's been mentioned to them, but basically what that shows is beyond your income and expenses, it shows what's actually in your bank account at any given time. It shows what you owe to other, maybe it's a credit card company, or maybe you have a loan from somewhere. It shows what money is owed to you. So it gives a fuller picture of kind of how healthy your business is, for lack of a... Key. The word healthy.
Yes.
If we don't stop as creative business owners and take a look, even if it's just one time in their accountant's office, how do we know where we're growing? How do we know where hey, you know what? We're going to have to increase some prices, or, we're going to have to cut back on here. If your business is growing leaps and bounds, and the first thing you go is, oh my gosh, I'm going to go rent a business. I'm going to go rent a studio space, or hey, I'm going to go hire 5 people. If you're not familiar with this dreaded piece of paper, you're going to find yourself in a lot of trouble. Now, you could find yourself very successful and it all works out well. However, I think err on the side of, oh my gosh, and we know we're risk takers or we wouldn't be entrepreneurs, right? But if you don't get familiar with this piece of paper, either doing it yourself or having somebody do it with you, I think it's going to, you need to know this, right? In order to grow your business.
You do. I mean, because it is, sometimes people can show a really great profit. So after their, their expense and then minus their income and they're like, wow, I made so much money. Yep. But then when you look to what's called the balance sheet, where it shows how much cash do you actually have on hand? What do you owe other people? It can be a kind of, it's not always, but many times it can be a very stark shock when people start understanding what that sheet is actually telling them. And so, when it comes to back to the bookkeeping side, I don't think any entrepreneur has to know everything there is to know about when it comes to money or taxes. But I do think there are some really key pieces that can support you in your understanding of how healthy your business is, or, sometimes people think, just like you said, Bobby, as they grow that, oh my gosh, now I can hire these 5 people because, wow, I have so much income. And you might be able to do that, but wouldn't it be better to understand exactly how much profit margin you have to play with before you do that? Because to figure out if it would be worth it to hire these people, would they bring in more income? And so I think it's getting, you don't have to know everything, but there are key concepts. And for instance, if you hired a bookkeeper to keep the bookkeeping for you, you don't have to do the day-to-day task of entering every expense, every deposit of income, but you would look at the reports like at the end of the month or weekly, depending on how, you work.
And you should do that at least once a month. You should have some sort of accountability of your business on your own. And you mentioned there are 2 points that you brought up there in that thing that will lead to another question. But you said also, if you are looking at this sheet and we want to go out and hire these people, would they bring in more money? Just because you might have an extra $1,000 sitting there does not equate to making that $1,000 grow if you hire 5 more people, because there's still things to go with that. But also, Erin, as we stated, if you have that extra $1,000 and you're in your 20s in your business, that's one thing. But if you're in your 30s, 40s, or 50s, you better be doing something with that $1,000. We had several questions that are saying, as self-employment people, how do I invest in retirement, in IRAs, what I need to do? And again, everybody, Erin is here giving us her information. We're not saying that it is by state, by county. Erin is giving overall information, and you guys can continue on with your own personal account or whatever, but she's giving us good, solid information as a starting point. So that was one of the questions. If we have this extra $1,000, is it always important to go get the next big thing, or should we be putting some of that $1,000 back into retirement? And what do you think the best route to go as an entrepreneur is?
Well, if you had $1,000 there, it's really hard to say what you should do with it without knowing the specifics of your business, right? Exactly. Because we all go through phases where we're growing our business, so we need to invest. But I'll say this, I always think it's important to have some money sitting in your bank account, just kind of as a buffer. We should also have probably some money set aside for things like taxes and estimated taxes. But if you had $1,000 there and you wanted to invest in your retirement, which is really important, especially self-employed, so there's no pension to save you unless you set up a pension for yourself. Your options as far as retirement goes are so much better than an employed person. And people are sometimes surprised to find that out because they think, what? Why? Why has no one told me this?
Everybody just dropped their coffee on that statement going back. What did you say?
Yeah. So as an employee, as the business owner, you actually get the opportunity to contribute both as the employee and the employer. And because of that, your the amounts that you can contribute double. So that's not across the board, like on IRAs, the 6,000 doesn't double to 12,000, right? But like in the 401ks, and we won't get into all the specifics because there's so many options as far as retirement accounts go, but your limit, doubles from I'm trying to think, we're in 2019 now, but I know in 2018 it was 55,000. I think it bumped up to 56,000 in 2019. But so that's a lot of money, you know, whereas if you were an employee, it would be limited to half of that.
Right.
But I think what is challenging for many entrepreneurs is to create the self-discipline to put that aside. Not necessarily that everyone is bringing in the cash flow where they could contribute 55 or 56,000 every year. But if you know it's an option as you're growing, that could be your goal long term, you know. Slowly as your business income increases every year, you increase what you contribute every year. There's also options if you're more towards the end of your career than not. That's kind of broad because I don't, you know, maybe within, like, if you think maybe I won't be doing this 10 years from now, there are even some options where you could kind of set up, it's closer. It's not exactly the same thing, but it's closer to a pension for yourself. And the limits for contributing to that are something crazy. And I understand that most listeners are not, you know, are not necessarily bringing in hundreds of thousands of dollars a year. But I want to bring this up because I think sometimes, or at least my experience was, and I talk to people where it has been, where we follow our passion and that's kind of the reward in itself, is that we get to do what we love. And if we have money, that's great, which, you know, I hope everyone has income that they can live off of. But people aren't always thinking that, you know, that making money is the ultimate, which I would say it's not in life. It's a piece that you need to support you. Exactly. But, you know, if you were making a lot of income and had it to put in, you could put in like over $200,000 a year, which you can't do as an employee. So, you know, for someone else. So I think but I bring that up just because I think it's encouraging to hear that, because it's not oh, woe is me. I get to do what I love, but I'm really stuck at not, you know, I'll never really be able to make that much money because so much goes out to expenses.
And I think that's what a lot of people think. I think so many, and I mean, I'm from this mindset, you know, I'm on that 10-year exit plan, you know, and doing this for 37 years, you know, I'm like, can I go 10 more years? But, you know, what is my choices? You know, I always joke and say, hey, you know, just as a wedding photographer, you know, kill me over, but at least let me get to the first kiss and then I'll die at the wedding, you know, but at least let me get that important moment for my client, you know, but I'm in the mindset too that, you know, where you said it the opposite, but I'm thinking going, and I know a lot of my, you know, fellow wedding professionals go, no, I'm paying double. I'm paying that portion and I'm paying the important portion and my portion. So I'm paying double. And yet you just flipped it and showed that it was a benefit that we're probably not. Again, it goes back to that, how we were taught to look at money.
Yes.
And it's like, these are, again, listeners, this is something that you can definitely ask your accountant or your, you know, professional that you have is, hey, so how can I set myself up a little bit better for success? Can I do this? I had no idea I could match that. Because again, most of our listeners, if you're listening in on this podcast and you're making $5.7 million, kudos to you. Thanks for joining us. But I think most of us are going, I'm on the $5 this week plan. So, you know, let's keep supporting each other. So that is a very good point. So listeners, take that back to your professionals. And again, you're going to want to reach out to Erin and get in maybe one of her classes. She has a lot of information that she can help you with. But that is an amazing point that, I mean, like I said, I never even thought about it that way. Never in all my years thought about it that way.
Oh, well, I'm so glad I could share that, you know, and since we're on this, if you don't mind me expanding a little bit further on that, I you know, when it comes to tax deductions, I think people are always looking, you know, what can I write off? What can I write off? And that's, you know, we should, because that's more money in our pocket. But one of the things that really drew me in, like way back when I started reading all these IRS publications and the tax code, I thought, gosh, this is amazing. If everyone really understood the US tax code, I think far more people would choose to work for themselves. And that's not the way we see it presented so much of the time. But I think the tax code, as it's written, and even after the reform, even more so actually after the reform, it really supports small business owners. And that's not, you know, our accounting industry really wasn't set up to encourage that. People are used to making their money just filing taxes. They're not, when you hire most people, when they hire an accountant, it is to file their taxes. And they think that they're hiring them to file their taxes, to optimize everything that they did that was already done, to change things so that they're going to get this amazing tax refund or deal. But that's not something that can be done when you're filing taxes. That's something that does take into place, like you stepping up and taking ownership and being proactive. And as much as maybe you don't want to address the money, if you take the time to figure out the things and put in place strategies that are going to help and support you, you really do have such a better, from my perspective, such a better tax deal, really, when we're talking about it, because things like tax deductions, similar to the retirement thing, there are so many things that so many self-employed people do on a regular basis that are directly related to their business and can be a tax deduction. But why often they're not deducted is because they don't have the documentation in place that's needed. And it's not like hard documentation. It's just like you have to understand some rules and some guidelines and then keep, a few pieces of proof, and then you're good to go, right? But when you don't have that, you can't even take it. And it becomes this thing like, ugh. So I guess I just invite people to, like you said, reframe it and to step into trying to see how the tax code and how the system in the US actually does support us, even if that's not something that we generally think about.
And if they would put prettier pictures on these tax books, more people would pick them up. Cool. I can see right now all going and looking up, okay, what tax books? Because I agree. I mean, if you sit back and take out your jealousy and enviness, when you see all these people on TV or you read about all these people on TV that are making all these millions of dollars, they're entrepreneurs. They're doing something. And yes, we are not going to get into the tax loopholes and all that stuff.
Right.
But like you said, the laws are there. They're wrote there. They're to help us. And more and more, and we're on a generation. If the millennials were not that generation, for sure the Z generation, most of these people are never going to know what working a cubicle is. Their cubicle is going to be wherever they decide to have a wonderful view, and they're going to live their life on a beach or in the mountains, working 9 to 5, looking at that view, being self-employed and making a living. So, I love the way that you said that, yes, we're set up here in the United States to actually be able to make a living doing what we love, and more people should do it. It's that first step of fear all the way around. And then the fear of the taxes. And I think because we've been taught and everything we read where if you do this, you got to pay this tax. If you do that, you got to pay that tax. Well, how can I ever make any money? And then if I get this, that brings us to the write-offs. One of the questions we have was, as wedding professionals, can we write off the clothes we wear on the wedding day?
I wish you could see me because I'm smiling.
I know.
So, that is one of those answers that I have to, I hate to say it, but it's just, it's a no. The tax code is pretty clear about it, and it has to do with, I won't go into all the details, but it has to do with, one, presumably anything you could wear to a wedding, you could wear to not just the wedding you went to, but you could wear it to your church, or you could wear it to, a wedding that you're not working at. So it has inherent personal use. When they talk about uniforms, they really are talking about, and even more so after the tax reform, things like, a costume. So a chicken costume. If you wanted to show up at a wedding in a chicken costume, be my guest, write it off, but I doubt that's going to go over super well with most people.
Well, we get some mascots that come. Here in the South, we get a lot of the college mascots that show
I bet you do. Yeah. So that's write-offable. Yeah.
Exactly. But see, but that's the thing. So and I do know several people who have the logo shirts when they're setting up on the wedding day. They have their, DJ company, photography company, wedding planning company, and then they change into a little bit nicer clothes. And let's say most of us are wearing suits and nicer things. Sure. But so when it comes to the write-off, they've already taken the write-off for that logo shirt as part of promotional material. It's not, quote, my wedding day uniform. I hear that when I'm out speaking. That question gets asked to the person talking about tax and business. That and can I take my skincare? Can I take my hair? The whole bit. Everything that they need to do on that wedding day, they're looking for a way to write it off. And it's, and smart business people to try it, Yeah,
it's a good question. I mean, I'm glad people ask it, but there's really no workaround for that. And if it makes people feel better, even performing, actors or actresses, they're not writing it off. They're not. They can't. So just so you know.
Well, again, we have some people in the hospitality industry and the hotels and things like that. And if you guys are wearing your uniforms, most of the places that I work, those uniforms are provided to them. They show up, they put the black pants and black shirt on with the apron, and they drop them off in the evening, and it goes off to get cleaned. So that's a whole different type of write-up, So you guys heard that,
sure.
It's still a no. We've heard it 1,000 times, but maybe this time it'll sink in. Maybe you'll trust Erin that it's a no. I mean, I've always heard it's a no, but I wanted to make sure we asked that question.
Yeah. And I will say, just because on podcasts and things like this, I love doing them and getting information out there, but obviously everyone's situation can be a little bit different. So I will say this, there are occasionally, like a very rare, less than 1% of the population of self-employed people that will be able to write off some clothing. But it really has to do more with, is that clothing directly related to the money they're making? And as a wedding, like a photographer, or say you're some kind of vendor on the wedding day or providing something, they're hiring you for your photography skills, or they're hiring you for your, planning the day skills, or for officiating. Even though presumably you need to look your best and be professional, or whatever the vibe is that they're hiring you for, they're not hiring you based off of what you're wearing. And that's why it becomes a no, and why occasionally there can be a yes, but it's very, very rare.
Exactly. So that'll bring us to we'll have another photographer's question, and it's a hard one. And I'm excited to hear your response on this one. But one of the number one is this, that I always get bookkeeping, but the number one question that gets asked, whether I'm speaking, and thank heaven it doesn't come to me, it goes to the person on the panel, but then it comes back to Bobby, what do you do? Oh. Every state is different. I know that there's this, these different laws that are around the state, but as photographers, so photographers, listen in the state of Georgia, we have people from Florida. I think we have people from like 70 different states, but I'm in Georgia. So what is the rule, to your best of your knowledge? I'm a photographer. Am I charging tax? And I'm just going to use a number here, $3,000 for me to go photograph your wedding day and give you your digital products on a download, meaning you go to my website, you download, digital download, $3,000. Am I charging tax on that $3,000? Am I charging tax on a portion of it? Do I only charge tax if they add an album, which is, quote, now a product? This is, you can call, and I'm just going to say that I've done it myself. My accountant has done it. You can call every single day and get a different answer. And I'm sure that everybody feels this way. So enlighten us, say you don't know, say your perspective on it. I mean, obviously we all have to go to individual people, but some states are saying that, because you are the person who created this digital product, therefore that service is taxable, because without your service, you couldn't tax it. Then there's some states that are like, nope, that's a service only if they're going to, so you separate it out and say, here's the product, they do it. What's your take on that?
So that's such a good question. And unfortunately, you're right. It is one of the most complicated questions and answers that I could give you.
And why is that? Maybe tell us why it's that way.
It's because sales tax is regulated by state. And then even some states have further sales taxes. And then once you're in the state, it's regulated by county. So it's really dependent more than anything on what county you're in offering the services or products you provide, right?
The county in the state too. It goes one step further?
Yes.
Okay.
So generally speaking, and this is frankly changing. I think it's going to continue to change over the next multiple decades. Nothing's super fast in the accounting or tax world, so it takes a while to catch up. But I would say, for instance, and let me put a disclaimer out. I know you already did, and thank you so much. I feel really supported, Bobby, I want to give information, but since I don't know your particular situation, I'm not your own, anyone that's listening, your accountant, or this is not legal or tax advice. It's just information. But generally speaking, services are generally not taxed, but products generally are taxed. And products in the past, and this has changed and I'll explain why in a little bit. In the past, it was thought of products are something tangible. It's something in hand. So that would be the actual, like if your clients, you take the photos and then they order canvas prints from you. That is in the past, what would be taxed would be the canvas prints. It's changing and has changed in some states already dramatically because so much of all the worlds have moved online. So, instead of, and I guess in the wedding industry, often it would be photos, they can download technically online or I don't even know what, but, there are things like, and I'm sure this exists in your industry too, like ebooks or I don't know, tips for the wedding day, or, there's so many things that are more of a written or visual form that you could download like as a PDF.
Right.
And a few states have gone to taxing those kind of things. So even though in the past that would have been viewed as a service because there's nothing tangible in hand, like you can't hold a PDF that's on your computer. You could print it off, but the actual thing that was provided, you can't hold. In the past, that was seen as still an extension of a service, but as so much of the world has moved online and therefore the commerce and things that are provided, some states have started taxing even things like that. So say you don't offer your clients, you don't do canvas prints for them, but somehow, maybe, I don't know, maybe you say $300 of what you paid me was for copies of the digital prints, and somehow you deliver those through an online service. Like you don't hand them a CD or anything.
Exactly. And that is common practice. I mean, just to catch you up, that is 99% of the people. We photograph your wedding, we put it on a gallery, we send you, hey, here's your PIN number, download. So nothing physically leaves my office. Nothing is in my hand. It is a digital copy of your wedding.
Right.
Now, we have shopping carts, and yes, you can go in there and you can click and order a canvas print. And when you do that, then when you order it, it is taxed.
Right.
So that's what I'm saying. Because, I'm speaking for a lot of people here. While somebody's investing $3,000, if I say to them, and I got to put 7% tax of Georgia on there, that's another $210. Do you know the number of people that will walk away from you to go find somebody who might break that law? Which is crazy to walk away for $210.
Yeah,
but
that's what I was thinking.
Everybody has their number.
Sure.
But it's also a ploy, and I use that word in quotations. There's businesses across the state that will say, hey, I don't charge that, so I'm going to save you. It's a promotional piece. Hey, I'm not going to charge you that tax. It's okay. I can get away with it. And then you have others who put on their online galleries that Georgia's a fabrication, whatever state you're in is a fabrication state, meaning I have to charge you this. And it gets to the point where the customers are just as confused as we are. So nobody knows what they're doing. And then, but the fear that is put in there, if you didn't do this, they can go back on you. And you're going to owe thousands and thousands of dollars. So that's why we as photographers are always seeking some clarity. And at least you're explaining it to a point that maybe we can understand it. So I didn't mean to interrupt you, but that's pretty much how it works. Like, you go online and download. So to me, that's not taxable. But I also understand that without me doing that, you couldn't have that download.
Right. So I think it becomes, unfortunately, I actually don't know Georgia's rule about, how they view just digital downloads, not even in the wedding industry, but like PDFs or whatnot. Maybe we can look that up and we can put it in the show notes. But it's, this would be my guess, having not talked to the Georgia tax authorities, I would think that if that's, if that needs to be taxed, that you're handing the pictures over online, that you would, as a photographer or as the business owner, you would want to separate out what it cost on your invoice. You would want to separate out what it cost when your customer's paying for your services, and as well as, this specific amount is dedicated to giving you the proofs or the actual copies or, access to the copies. I would think that would be an easier way to separate it out and not have it all taxed. Of course, some states, I think, do have it where everything's taxed, but that isn't as clean. I guess when you would quote, you might say, oh, it would be $3,000 or it would be $3,200. Right. And then when they get the actual invoice, it's all broken out, what's what. But the other option would be to just quote a flat amount to people, which I'm sure is what people do. But even the photographers you're talking about that say they're not going to charge that sales tax, what they might be doing, because we don't know, because we're not behind their business, they may be charging them $3,000 and then they're paying that tax behind the scenes. Right. You know, like they're not charging the customer the tax, but they're
still paying that $210. One way or the other, the government is getting $210.
Right. So it's just you have to kind of you have to do your due diligence in this state, unfortunately, and figure out what it is, in your county specifically, and that's going to be where your business is based, and then just do your best from there. And it probably is going to behoove you, if you do have to charge that sales tax, to separate out the amounts, even though to you may say, this is my package price. It is your package price, but just start throwing values at what is the actual, more the product side, even though it's, online still, versus your services. And
you're going to do what makes you sleep at night. If, you have to do, if you even have an inkling, and I share this all the time when I'm speaking, you have to be you and don't follow these trends or what somebody else is doing. If it bothers you that, oh my gosh, I might be in trouble, then just do it the way that you just said it. Say it's 20, whatever, 100, and put the 210 back, save it, put it somewhere in case you need it. Just do what's going to make you feel right, so you don't feel like you're ripping off your people, and keep your business honest. And again, be authentic, be honest, and put people before the profits, and we're all going to succeed.
Right.
So thank you for the clarity on that and why that is. So one of the other questions that we have here, we get a lot as wedding planners, DJs, all of us. What is the best way to go about mileage? Is there an app that you like for mileage? Again, mileage is going to change county to county, state to state, but how do you think we should be handling our car expenses if we're driving without it being a company car? It's our personal car that we drive to meetings and all that good stuff. What's your take on that?
So as a business owner, let's assume that it's not a company car, like you said. You have a few different options. People always think of mileage because that's the most talked about, known option. And that's actually regulated by the federal government. So every year they release whatever the number is. It's usually like 56 cents or 55 cents. It fluctuates up and down within a few cents each year. And so what that essentially means is, if you tracked your mileage and saw that you drove 1,000 miles for the year, then you'd multiply that by 55 cents or whatever it is, and you get that as a deduction. As far as apps go, there are several, but I think one that I've had success using and many of my clients and students really love is Mileage IQ. I don't have any relationship with them, so any of these things I'm mentioning, it's just what I like.
Exactly.
But I think
you, and that's what we like here. None of us are being endorsed by anybody, but we are just talking about how to make our business run a little bit better.
Right. Yeah. I think it's a really intuitive app as far as it goes, and makes it, easier. You don't have to plug in a ton of stuff. And so I would suggest that if you're calculating or tracking your mileage. You also have some other options, and I'll just go through them briefly. One of the ways that I think people can get a much larger auto deduction if you're doing any sort of driving for your business. And I think in the wedding industry, it would actually be a lot compared to some other industries, simply because you go to different reception sites and photos and, and that would be to calculate a percent. So you would basically, there's a process you go through, but you figure out your business use percent. And what that ends up doing is you get to take a percent of all the auto expenses for the year. So you're not, you would be tracking things like fuel and, if you had repairs and
changes, anything like that.
Yeah. Any kind of change.
So that your uniform that you can't write off doesn't get dirty. How about that?
Yes, exactly. And that's part of it, whether you're taking mileage or an auto, a business use percent, it's for a lot of people, they say, and I would think it would be different in the wedding industry, but they think, oh, I don't really drive that much. But even people who are not in the wedding industry and maybe work from a home office and most of their meetings are online virtually, they actually, if they start tracking what is a business drive. So say when they when they pick up the uniform from the dry cleaner, or when they go mail thank you cards to their customers, or when they go to Kroger's because they forgot that they don't have any stamps and they're getting milk personally, but because they went for business stamps, that becomes like a business trip, right?
Right.
And so I think we can't go deep into the auto stuff because I could talk about that for an hour or two, but it's known that there are options, and you want to make sure that what I always suggest to my clients is, if you're really serious about, making sure you're getting the best financial return from your business, is sometimes in some of these deductions, you want to learn how to calculate the different ways. And then you can look at, okay, well, if I did mileage, it would be, I get $555. But if I deducted the business use percent, oh, wow, I would get to deduct $3,000 this year. So I'm going to choose that one, right? Because you don't know unless you look at the numbers and spend a little time figuring it out. And then for the future.
Well, that's the thing. Again, we go back to what we talked about earlier. Do some research on your own. And if your accountant is only telling you the mileage percentage, then you need to ask. I know personally for me, I do the percentage off because I do so much driving.
Yeah.
I have meetings, I have engagement sessions, and most of us in the wedding industry have meetings beforehand, have other things to do. So one particular job, one particular client could have 25 driving things just before I even get to the wedding with all the things I have to do. So for me in my business, that's been the better route for me to go. But again, listeners, these are things like Erin is sharing with you, that research a little bit yourself and find out, and then don't be afraid to say to your accountant, hey, how about this? You touched on something that I wanted, it's not in our questions, but I was brilliant when you said it. A lot of us do stay home. A lot of us never leave our office. And one of my speeches is get out of your pajamas and network. So for people like that, if you're an entrepreneur, this is a very broad question, so bear with me.
Okay, sure.
If you're an entrepreneur in the wedding industry, and I can think of a couple that never leave your house, officiant, maybe hair and makeup, you never leave except for that one day. How there has to be ways that you need to take advantage of some write-offs, or you need write-offs in order to make profit. So if you're never leaving your house to do anything, how do you get write-offs? I mean, just like you said, go to the post office and pick up milk along the way. There are things that you can do, right? Because you do need some sort of write-off, right?
Yeah. Well, I mean, from the government perspective, they would say you don't have to have any write-offs. That they would love that.
Sure.
But that's a good question, and that it's funny. I never thought of it like that. But what I do have, I work with a lot of people, honestly, that are in the online world, even though they show up at events or different stuff. But yeah, they're primarily working from home, and most days, more than not, they're conducting their work remotely, whether it's like through the phone calls or Zoom or something like that. But those people, I find they don't really have to change that much because they are getting out and running their business errands. Occasionally you might have someone who really stays literally at home. But what's interesting is the deductions don't change. I mean, if their business is making money and they're, I think it's sometimes just switching on, like you sometimes hear, teachers back in the day, I remember they'd say, switch on your thinking cap. Right. I kind of think it's like, switch on your business cap. What am I doing in a daily basis, or what am I doing throughout my week, or just what am I doing in life that is directly related somehow to my business? And, frankly, when you're self-employed, you are doing so many of those things. And many times there is an overlap though with personal. And so because we know, for instance, we're going to the grocery store because we're picking up milk for ourselves, because we picked up stamps, that kind of doesn't even enter the radar. But if we turn on our business thinking cap, that is a business trip, and I think it's just getting, a lot of times when you have meals with colleagues and you're talking about business stuff, or
you take that coffee that you didn't plan on talking about business, and
Yes.
somebody walks up to your table and says, "Oh, my daughter's getting married." Now that has turned into a business lunch.
Yes, exactly. And it's all these little, what might seem minute. Sometimes people are like, "Oh, $3. I don't care about that." And I understand that, because $3 over the course of a year, that's nothing. But what we're really talking about is that $3 times 50 times 100 times the rest of your life, because it's getting that clarity and figuring out those deductions, because it's not just that one $3 coffee. It's what that means as you go about the rest of your life.
Exactly. And that's every day I call it connecting. And I hate the word networking, but I call it connecting. Mm-hmm. I can be in line at the coffee shop and somebody behind me says something. I now have the opportunity to connect my business to them, no matter what it is. But in the wedding industry, let's face it, everybody someday, every day, every hour is talking about a wedding somewhere. Somebody's getting married. Somebody knows somebody getting married. So we're in an industry that is really recession proof. I always say, because somebody's always getting married, even if it's on a budget and a shotgun wedding. Somebody's getting married. So that's what I mean. I always wanted to say that. It's like, don't knock that $3 coffee that you sat down with and just went to Susie, and you're talking about Susie's kids and she's having a really bad day. Trust me, that's going to turn into a conversation. And there's so many things that we can do. And so that brings us to, now I have all these loose receipts, or I have all my apps. How long do I need to have that box full of 2018, 2014, 2000? How long do I need to keep all that information, all my scribbles, in case I would get audited? What do you recommend?
So that's a great question. Generally, you hear the answer to that as either 3 or 7 years, depending on where the person heard it from. And I used to subscribe to, back before I was working in the accounting and tax world, I used to do like 3 years, and then I heard 7. And so I looked it up and I was like, okay, 7's the standard. But I will be honest, since I've been in this world and gone through audits with many clients, I think those receipts you really want to keep the rest of your life, as unpopular as that might be to say. And it's because what happens is when you start looking at like the statute of limitations, which is basically what the IRS has put out as far as how many years they have to audit things based off of when you file, and based off of if it was fraudulent, and based off of all these different pieces. There are several that have no statutes of limitations. And I know that the people I'm working with are honestly, I know the people I'm working with are generally really heart-centered and creative, and they're not people that are trying to actively do criminal or fraudulent things. But what you don't know in the future, and I've seen this play out a few times, unfortunately, is, sometimes what has happened is, and this isn't meant to scare anyone, it's just trying to give more information. I've seen it where a disgruntled former employee or subcontractor is audited for some reason, probably because they were dishonest about their stuff. And then they throw shade at this business owner, and they've said enough that there's an obligation to look into your records. And, they have to find something it doesn't always go into a full audit or anything like that. But what I guess what I've been thinking ever since I started realizing this for the last several years is, why not just have the receipts and the copy of your tax return? Because then you're supported. And if there ever was a question, not so much you've done ethically and are above board, but to have that as proof would just feel so much better than trying to, when it's years and years later, trying to be like,
it's definitely easier now with the digital, but I can tell you that, I have a storage facility and there's things from 1990 in there, and you go in there and some of the papers have faded. You can't even read them,
right.
So it's kind of like, it's like, so I agree. And that brings us to that question. You just led right into it. So many people in the wedding industry have to have associates or quote day of helpers. And, they're not on payroll, 1099, especially like in my field, associate photographers. I don't want them on payroll, or maybe I do want them on payroll, but wedding planners, same thing, have to bring 8 or 9 people in. Mm-hmm. So are you from the belief that everybody should just be 1099 as a contract employer or employee? Or are you thinking, again, depending on the business, does it make more financial sense for the business if they're going to be around for years just to put them on payroll?
Yeah, I think that is a question that depends on what, the business owner's goals are and how they like working with let's just use the associate photographer example, right?
Right.
Technically speaking, and I'm not a lawyer, but technically speaking, just from the legal perspective, there's a pretty drawn line between who technically is supposed to be a 1099 contractor and who would be on payroll. And the general gist of it is that if you are telling someone what to do, how to do it, when to do it, where to show up, that's an employee because they're not doing whatever it is you've hired them to do on their own terms, right?
Right.
However, realistically speaking, I know, and I think all of us know, that does not always happen with small businesses because sometimes when you hire an associate photographer, it really is just for the day. And you think, well, why would I put this person on payroll? Or it might be because sometimes it's because that person doesn't want to be on payroll because maybe they, I don't think this is super common, but maybe their business, for lack of, it's their business is to be the support system for other photographers.
Yes.
And
that is very common. Yes.
Yeah. So if they choose that, that's not like their business is offering your business a service. So they're not an employee.
Correct.
But if you're hiring people just because you think it's cheaper, that might, it could bite you in the rear at some point just because they technically would have legal options as far as suing you goes, or, saying that they were technically an employee, but you only paid them as a subcontractor. But I think what I think is the best way to approach it is to think about who are you working with and what is the purpose? Is this a one-off like for the day, or are they going to be with me for years? And if they're going to be with you for years, maybe and they're not working, for lots of other people and that's their business, maybe they need to be an employee. And you do pay as a business owner, you pay about 7.25% more. So whatever you pay them, and then the taxes you'll owe is about 7.25% more, just as an employer, a year. So that's something to keep in mind. And it sure is, I don't know, it just gets tricky because there's one answer that from a legal perspective, and there's another where it's, what's more common practice. And I think it's, just getting clear on, are you figuring it out? Do you know this is going to be long-term? Is this someone who does this as their own business? And the other thing you can do, especially if you are hiring subcontractors, I'm not a lawyer again, but would be to make sure that's in writing, that is in your contract with that person, that they are employed as a subcontractor for the day or for whatever it is, so that it's clear that they weren't an employee, if that makes sense.
No. And there's so many, oh my gosh, that's a 5-episode coverage of all the do's and the don'ts. And, all of us in the wedding industry all have clauses, names, the Susie clause, the Betsy clause, like any business.
Yes.
You do it all right, and then one day somebody comes along and just screws up the whole contract, and now you got a clause. But that's one reason I wanted to bring it up. It's way different than if you're a wedding planner and every weekend you get your nephew and his 5 Goonies to load 900 chairs for pizza and beer.
Right.
It's
yes.
nothing different than, hey, just the glorified movers, versus having one of your people move the chairs, put on the uniform, and are greeting the people and representing you and your brand. So that's one reason I wanted to touch on it. I want to shift gears a little bit because this wedding industry in 2019, in the past few years, is geared towards a woman industry. When I started 37 years ago, one of the things I was told was, you're never going to make it. You're not a male. I was one of the only female photographers in the Midwest that was doing weddings, because big gear, big stuff. And, nobody thought women knew anything. Right. So, all these years later, we now have more male florists, and we have some amazing male wedding planners. And it's shifted a little bit. So I want to talk a little bit, if you can. You and I both come from the same place that, putting people first, and, then we can all be profitable. And coming from a place of knowledge and power is a good thing, and understanding. As a small business woman yourself, where are some of the things that you think small business owner women, some of the things they can do immediately to look into, like, hey, there's something special if you're a women-run business, there's some savings that are special for you, just some of the things that they can do to really take care of themselves and keep their business growing financially?
That's a great question. I think one is coming to the table and having a relationship with money, regardless of how you feel about it, just knowing that as a business owner, you are going to be so much better off by stepping up. And even if you don't feel comfortable with it, having some sort of relationship with it and realizing it's a dance. So it's not something, if you're coming from a more negative place or more fear place than not, it's not going to be corrected overnight, but just stepping up to the table. Right. I think another piece, when we come to the taxes and accounting, many people, even millennials, I find if they have a male partner, a lot of times they delegate the money stuff to them. And for me, that's, I get chills when I say that, because it basically what happens when you're doing that is you're giving your power away.
Right.
And, if I am a very spiritual person, and, if you look to other practices, take money out of it aside, if you look to yogic practices or, in chakras, money is very connected to what is considered our root chakra, which is where our power, our confidence, and sexuality all lie. And, so if you think about that for a minute, regardless if you buy into all that or not, but if you think about if your money is and financial stuff rides in the same area as your confidence, your sexuality, and power, like, gosh, it's stunning, because, think if you never address the money side, there's always going to be this like repressed side of you because you're not fully expressed. Right. And I think just having awareness that money isn't just the cash that we're handing over or the what hits our bank account. It is this kind of dance, and I'm going very woo here, so I hope it's not too much, but it is this.
You have my same philosophy. So
okay. Yeah. So it is this dance of, you're not, and if you're starting from nothing or from not a great place, it's not going to just all jive overnight. Like many things in life, once you start addressing it, it might actually feel a little bit messier in the beginning, because really it hasn't gotten messier, but what's happened is your awareness all of a sudden is like, oh crap, I didn't know about that. I didn't know about that. And it can feel overwhelming, but just taking it one step at a time going forward. And I think another piece that is really, really crucial for women, especially, we have such an awareness of, whether we're a mother or in some sort of partnership or not, there's such a nurturing aspect of who we are inherently, even if you're, a badass, really strong woman. So everyone has this soft side and wants to take care of themselves and their friends, and that's something that's inherently in us. And I think just realizing that the more you can feel that way about your money, the more that you're actually able to take care of yourself. Because, like it or not, we do live in a world where we do have to use money to buy things and to get by and to live. We don't have the option of, living in a commune or living in, I guess technically we do, but,
right.
but we don't really, it's not commonplace at all to just go choose to live in the mountains, with nothing and not bringing anything. And so I think, just realizing that that's a piece that is, rather than being scary and yucky and it might be all those things right now, it can really support you in really stepping into who you are fully, both with money and money aside. And I think one last piece is that sometimes I work, mostly I work with female business owners, but occasionally I'll work with a man, or sometimes I'll have couples that that run their business together. And one man, he and his wife, I've worked with them for a few years, and he said to me once, he's like, I just love talking to you because from a male perspective, and they'd worked with male accountants and tax filers before, he's like, we've never thought about money like nurturing us and taking care of us in like an energetic way, or how, and we hadn't thought about how we need to protect and secure ourselves with some financial practices, rather than just claiming a deduction, for instance, making sure we have the proof, or, and I think as women, we are inherently geared towards protecting ourselves and protecting others. And I think that's something that we can just use as a superpower, and just seeing that the way we handle our money and the more we know about money, the more we are able to protect ourselves as well as those we love.
Well, and I look at it this way, as a woman and women-owned businesses, and it goes towards males too, but anytime you take that first step to put an open sign up, no matter what industry you're in, you've taken the steps, but especially as women, you've taken those steps. You've stumbled along the way. You probably are opening your doors because of something that didn't work out when you were getting married. Or you said, oh my gosh, I couldn't find that when I was getting married, so I'm going to create that. So you've taken the steps to do this, and it baffles me the number of women that I highly respect, and I find out that their husband or somebody else is running the business side of their business. Now, I'm not saying that that's good or bad, but it is your money. You are doing this work. Yes, put into your family. It's to support your family. It's shared, you're sharing it. It's a shared.
Sure.
But be able to walk into the bank and know the numbers. Be able to walk into the accountant and say, I want to do this, this, and this. And when you set a 5-year, 10-year, 20-year goal of where you want your business to go, be the one speaking it. You have to have your voice heard. I mean, 90% of the people in the business industry are going to be male. So maybe seek out another female. I'm not saying they always feel for us or whatever, but there has to be a community, and we are all bosses, and we all are doing this. The wedding industry, by definition of itself, everybody's a mom. I don't care if you're that 20-year-old wedding planner or that 30-year-old DJ. There's something about you that because you're a woman and now in the wedding, you want to be that couple's mom. I want to make sure this goes great. You're the mom's, the mom of the bride or the mom of the groom. You console them. Everything's going to be great. It's going to be right. So I strongly always urge, don't be afraid to own your money. Don't be afraid to make money. Don't be afraid to accept the money. Accept all the wonderful things that go with money. Money is not dirty or bad. And I'm a lot like you. If you put out there to the universe that you're afraid of money, it's going to have a hard time finding you. If you put out there and you're accepting, hey, I'm ready for it to come. I'm setting my doors up for success. The money will flow. I put people first. I will have a successful career. I built a 37-year career, still very, thank heaven, successful, because I always put the people first and the money will follow. And you put your purpose and your passion first and the money will follow. That doesn't go with everybody's philosophy, like you said.
Right.
But women especially need to take ownership of, yes, this is my business. I'm going to own all of it. Seek out help, but do not be afraid. And don't just hand over the money to somebody because you think that's the route to go or that's how it should be. This is your business. We were talking earlier before we went on the air, and we were talking about how this generation doesn't even really understand the money and the conversation. And we have got to teach our daughters and our nieces and anybody around us, the women especially, that you can earn this. This is yours. You choose to do with it. You were talking about a friend of yours and I have plenty of friends who have the Uber app on their phone, and they don't even realize that the money's leaving. They just use the apps. They never have the coin or the dollar bill in their hand to see it become less. And they don't even look at bank accounts anymore. So women especially, come to the table, have the conversation, and take your daughters along on that portion of your job. Take your daughters, show them, even if you don't go to the bank anymore, show them the online portion, show them the spreadsheet, show them, And then the next generation of women will be really, able to say, hey, look, I know how to manage money. This is what I'm doing. And at any age, it's not too late to start. So, thank you for those tidbits. I really appreciate us getting into that. One last thing before we let you go here, and it may be a doozy of one, but it is a lot of the questions fall into depreciation. Wedding planners have rental chairs.
Yes.
Excuse me. Wedding decor people have inventory.
Mm-hmm.
Photographers have camera. So this had about 9 questions attached to it. So it's a good place for us to end. Can you speak a little bit about depreciation of inventory?
Mm-hmm.
Should we be doing that? And is it important to, when you can get the money, to keep refilling your inventory, but then what to do with the old inventory so that you don't have too much, but you still get a good tax deduction?
Sure. So just for anyone who's listening who doesn't really even understand what depreciation is, let me start there. So essentially there are things you buy like cameras or equipment, or yes, if you provide wedding rentals, that would be the chairs or the decorations or the pillars or whatever it is. It's basically things that have inherent value in themselves. So from like an accounting perspective, they're considered an asset, which really just means that, if you were to go out tomorrow and sell that camera you bought, it has value. Someone's going to pay for it, right? I mean, you say you bought a $2,000 camera, 2 days later, you change your mind and you put it on Craigslist. Someone's going to pay a lot of money for that. Not maybe $2,000, but a lot of money because it has value. So what happens from like a tax perspective is that traditional accounting would be, and how the tax code is written, is that you have to depreciate assets, which would be equipment or rentals or a car or furniture. And those are all on different schedules. Like if we're talking just about a camera that a photographer uses, that's on a 5-year schedule. And what that specifically means is that over the course of 5 years, you deduct that. So say you bought a camera that was $2,000. Instead of getting the full write-off of $2,000 in the year you buy it, that's spread over 5 years. Now, to complicate this, there are actually a bunch of different methods of how the depreciation is calculated. And, that's not something you need to know all the ins and outs of because it's confusing. But basically, it's just spread over 5 years, right? Now, I will say there's a fun workaround that I can share with your listeners that if your business has profit at the end of the year, meaning you have your revenue, so everything you brought in, the income minus expenses, and you still have profit left there, you can claim something called a Section 179 deduction. And that is something that would basically allow you to expense the item in full. So say you bought that $2,000 camera, you could write it all off in that year. So that can be helpful as far as write-offs go. There's some rules around that, but generally speaking, if you have profit, you can, deduct up to the amount of profit you had. So if you had $5,000 in profit and you had bought this $2,000 camera, you could choose to Section 179 that $2,000 camera for the year. Now, you wouldn't get to write it off any of the following 5 years, but you would write it off that 1 year. So the camera's on a 5-year schedule. All these different things that we're talking about, they're on different schedules, and rentals are on even a different schedule than others. But it's something that, it's just a fact of life. And, if you're doing rentals, for instance, I really don't, well, I guess it would depend on how high your turnover is. How often do you need to does your materials either get wear and tear, or do you have to replace them, or is it completely out of style?
When groomsman falls over and pukes, you might need to buy a new couch. There you go.
Right.
Say it, Erin. Come on.
Right. Okay. Yeah. So how often do those things happen?
More than you can imagine.
I would imagine. So I'm sure every year, for instance, that you're buying some stuff. But I think, it would depend on exactly how your business is set up, but it might be that, you get comfortable Section 179ing like a lot of that every year. If you're not, the benefit of depreciation, or what can be a benefit, is that if you choose to depreciate over the 5 years or the 7 years or the 29 years, depending on what kind of equipment we're talking about, the benefit of that would be if, say, 5 years from now, you're making a lot more money, you would have something to continue deducting, right? So, I mean, but on the other hand, I feel like a lot of business owners really care more about the now. So it's just something to keep in mind as far as depreciation goes. And as far as, I would imagine some of the things are resellable. And I imagine a lot of it isn't resellable. So if you don't resell it, you don't have to worry about it. Again, really. But if you do resell it, then that would be you would have to keep track of what you sold that was in your inventory or your equipment. And that would be taxed, but it wouldn't be taxed super high, but it's just something that you have to know. You do have to keep track of that. Like if you had a camera and you decided to sell it for some reason and it was less than the 5 years and you were depreciating, you would have to claim that on your tax return.
Right. Gosh.
Is that helpful? It's just a little confusing.
It is, because it's like, for me, that's what I do. But I mean, when I was talking about some write-offs and some deductions, tomorrow's episode is with a rental gentleman. And he owns a rental company, and one of the decor. And one of the things we talked about was, hey man, maybe get that question in. I'm like, I will get that question in. It parlays through. It doesn't really matter. I know it's all different, but it doesn't matter. And I kind of lied there. I am going to ask one more question, and it hopefully won't be too lengthy for you, but I think it's a good place to end. In your point of view, and just especially for creative entrepreneurs. Everybody talks, they can't wait to get this tax refund. But in business, is your goal not to not get a refund? Is not your goal is to make money all year long so that you're not getting some massive refund? Is your goal as a small business owner to not get a refund? Does that make sense?
I think it is. Yes. Okay.
So
I think your goal as a small business owner is to be paying estimated taxes. I mean, because you don't want a refund. That means you have not put as much money in your pocket as you needed to throughout the year to make this a thriving business and sustainable for you to live on.
And that's the quote, folks. That is the quote of the episode right there.
So, as unfun and unsexy as estimated taxes sound, I promise I promise once you step into that dance, it actually it feels a lot better because, it's not a surprise at the end of the year, because estimated taxes versus having a $40,000 tax bill at the end of the following year doesn't feel good either. So why not just be proactive and pay as you go and figure that out and, and not mess with the refund, not mess with the big tax bill, just, step into it and do a little bit at a time.
There you go, folks. So I've been trying to preach that for years, and it's a hard thing to preach, and I know people don't get what I'm saying, and I don't want a $40,000 tax dollar. I don't want that huge tax.
Right.
Take it from somebody who has had errors along the way in 37 years. I have had an accountant that messed up, and I have had to go on a payment plan, and I've had errors have been made, and I had to own it. Just because that person made a mistake, that is the person who I hired, and I have to own that. I'm accountable for that, and so do your due diligence when you're seeking somebody. But and I and been with you for a long time, and again, I'll end this conversation. Anytime we talk about business and taxes, it's a very personal thing that we don't like to talk about, but it's much needed. But you have got to have somebody that you trust. You have to have somebody that is okay with you walking in once in a while saying, hey, show me what's going on. I need to know. Don't be complicit that this person has your back and you wait 8 or 9 years later and find out that, hey, you owe money. Right. So don't do that. So I'll say that. But I cannot thank you enough. I know this is one of the topics that our listeners have been bugging me for. I'm so thrilled that I found you. I want you to remind everybody where they can find you. And then I think you have a little special set up for our listeners. Yes. So give all listeners that information.
Yeah. Well, first of all, thank you so much for having me, Bobby. It's been really fun to talk about all this stuff. But yeah, if you have more questions, I have a lot of posts up on my website, which is Erin Armstrong, ERIN Armstrong.com. And, generally speaking, I work one-on-one with business owners. I also, what's kind of a more popular choice these days is run a group program several times a year where I help you dive into all this stuff and where you actually get, codes and formulas that you get to, where you can figure out the estimated taxes on your own, as well as really figuring out how to set up your strategy. And I will say, I love everything you said, Bobby, about finding someone you trust and not being afraid to ask questions. And I 100% stand behind that. But I also say you need to know that you have to develop some financial ownership too, if you really want it to work out.
Exactly.
But the last thing I want to leave with is that I set up a page. It's erinarmstrong.com/Bobby, BOBBI. And I have a free tax deduction checklist. If you want to take a look, there's, I think it's 73 or 74 top tax deductions there, just to get the wheels turning in your head if you're thinking, what can I deduct? Exactly. So hopefully that's a fun and helpful resource. And of course, if you have any questions, as you're listening to this, don't be afraid to reach out to me, either through my website or through something like Instagram. But it's really been fun to talk with you here, Bobby, today.
Well, no, and like I said, our listeners are I know I'm already gonna get asked, bring her back, and and we'll plan on that.Maybe we'll come up with we'll plan on after April, maybe midsummer. Maybe we can do a midsummer check-in point that'd
be fun
a little bit later. And again, I think the Q&A from the listeners helps well, but also there might be a topic that you stumble upon that you think might be great to bring to listeners. So we'll definitely keep in touch. So listeners, make sure you check out that erinarmstrong.com/Bobby. Lots of tips. I am going to go ahead today, listeners. Some of you are going to already know about this by the time you listen. We're going to do plenty of shout outs now before this airs on social media. So some of you have already been following her along. So thank you so much, Erin. Best wishes to you. I love entrepreneurship with women, especially, and bringing the hard part to the creative, making it easy for us to understand is much appreciated. And I know the listeners are going to get a lot of information out of this. So thank you so much for your time.
Oh, you're welcome. And thank you.
Thanks for joining us. We hope these conversations will take you into your wedding weekend with a little more confidence, proud of what you do and how you serve your clients. Maybe you even picked up a business tip or two. Till next time, be Fabbo.